the battle line. That's our topic for today's Backstage Pass. Hello friends, happy first day of November. We are starting a brand new month, and golly, again, it just seems like this year is just flying by so quickly. Today, stocks are down so far, and mortgage bonds are down as well, but mortgage bonds are down from being up this morning. Actually, in the earlier sessions, mortgage bonds were up, but after the release of ISM manufacturing data, which beat expectations only just a little bit, well, it didn't show enough slowdown in the economy for mortgage bonds and the bond market, so bond market reacted kind of adversely to that little bit of data. Right now, mortgage bonds are down about 3 basis points at the time of recording. The 10-year yield is down 2 basis points as well. It's trading at about 3.06%. And the 25-day moving average for both mortgage bonds and the 10-year yield, well, that's been the battle line, the line drawn in the sand, and mortgage bonds just have not been able to push above that. Remember, we talked last week about mortgage bonds moved above that 25 DMA, but they came back down underneath that and are testing that kind of constantly. So that 25-day moving average, that's the battle line. And also this week, today, marks the kickoff for the Fed FOMC meeting for November, and everybody is expecting the Fed to hike the Fed fund rate, to raise the Fed fund rate by 75 basis points. And it's hard to imagine that the markets don't already have this planned in. That's what everybody's expecting. But the one thing that is always a question mark on these FOMC meetings, at least right now, is what the Fed is thinking for the future. And we'll get some comments and some a Q&A session from Fed Chairman Jerome Powell after the conclusion of the meeting tomorrow. And those comments always provide a little bit of volatility in the market. So we will see what the Fed is thinking, at least get a little bit of insight for what the Fed is thinking for future meetings. And then we'll also see how the market responds to that. Now, in the meantime, we did get some news in housing. This news comes from CoreLogic. And CoreLogic released their home price index. And this home price index was for the month of September and showed home prices decreased 0.5% and rose 11.4% year over year. Now, this is a decline from the previous reading, which is about 13.5%, but still significant. And one thing that we noticed inside the CoreLogic report, we actually noticed and took a look at the forecast, what CoreLogic was forecasting. And they said for the month of October, they expect home appreciation to be flat, or home prices to be flat, but they do expect this time next year for home prices to go up by 3.9%. Let's call it 4%. Now, that's an adjustment from the previous reading. The previous reading was only showing about 3.2%. So again, CoreLogic is starting to adjust their future forecast for appreciation up just a little bit, and that's a little bit closer to what we think that mid-single digit number of appreciation. And listen, this is important because there's a lot of people that are on the sideline right now that are thinking they're not buying right now. They're thinking home prices have got to come down. There's going to be a bubble. There's going to be a crash. Home prices are coming down. Homes are still appreciating, and it's still being forecasted for them to appreciate into next year at a clip of about 4%. So that's pretty major. So if you're on the sidelines thinking, should I buy now? Absolutely. Home prices are going to continue to go up. Now, that's all the news that we have for today. Again, as data comes this week, especially tomorrow with the Fed meeting, we will let you know. That's all we have for right now. Don't forget, stay positive. Have a great day, and we'll see you tomorrow.